Hello and good evening. This is Neil with Simple Futures. It is Wednesday. Wednesday, day in front of CPI Thursday tomorrow. I got that to look forward to. And the theme tonight, I think I'm going to title this one, It's Tricky. This goes out to David Starr. A shout out to David. We had discussions in the trading room today about the nature of the trade today and how tricky it was, and so I'll show you what I mean here. This is what you see on screen is just today. You can see Wednesday starts here at the highs, essentially at yesterday's settlement, right at about 18 or so in the ES, and breaks all the way down to that gap down there from the, let me get the date for it. I think it was the 11th. Yeah, July the 11th. There was a gap down there. By the way, July the 12th was CPI of July, and the news print, the price when the news was released on CPI a month ago was 44.83. Okay. But the gap that was left behind on that day was at 78, and that's the price that it traded today. If you remember, I gave you a bearish target the other day from 45.43. I gave you a bearish target of 44.75. It didn't trade there. It traded 78. It got close, but it didn't get there. But this is trickier than just that, and it's trickier than just simply the fact that I can say, look, it started near the highs here today, it broke all the way down to the gap, and then it rallied all the way back up to the highs, and then it broke all the way back down to the lows. All that's true. That in and of itself is quite tricky, to be honest with you. But interestingly, another thing that was odd about this was the fact that yesterday, let's see if I can scroll back and show you yesterday. Yeah. You can see yesterday did some odd things also. In that, it traded down to a price within the first hour. After that first hour, the initial balance, it broke below that price at 10 o'clock. Which was 30 minutes after, the first hour was in. Then it rallied through the top of the first hour and continued to an extreme and went out at that extreme. That's called a neutral extreme bullish. Neutral because it went through both of the sides of the initial balance, both the low and the high. Extreme because it ended on an extreme. And bullish because it finished in a bullish manner versus a bearish. A bearish would be obviously that it went through the high first, then through the low, and then ended on the lows. That would be neutral extreme bearish. But this was neutral extreme bullish. The implication there is noteworthy, and it is that you would anticipate that to mean and call for additional follow-through in that direction. That's precisely what happened. If it went out at 18 yesterday, it put in a 36 high overnight last night. So there was continuation in the overnight last night over and above what was offered yesterday from, an 80 low up to an 18 high, 44.80 by 45.18. Notice this though. This is the tricky part. At neutral extreme bullish, it would have you to anticipate additional follow through to the upside. That's true, it did happen. But what did it do while doing that? Left balance. Look at balances all the way back down here at the lows at 44.87. It's almost on the lows. So it left the balance or point of control or the most valued, traded, most agreed upon price of the entire session all the way at the lows while price going out at the highs on a day type that would have you to anticipate additional follow through to the upside, all of which is true. Neutral extreme bullish. Did it continue? Yes, it did. But leaving value all the way at the lows, it says, wait a minute. We discussed this in the trade room. This is not after the fact, okay? We discussed this pre-market this morning in the trade room about how tricky we anticipated today was going to be because of this very observation before the bell ever rang today. Hey, here's what this did yesterday. This presents a problem for today. The problem is, one, it calls for bullish, and it did that. But then two, it calls for bearish because of what it did in leaving balance all the way down at the lows. So what do we get today? Well, a little bit of all of the above. Both bullish and bearish and tricky. In that we started at the settle, we broke all the way back to the balance, we made a new lower low, which by the way is Wednesday, we made a midweek shuffle low today, only to rally all the way back up to settle, prior settle, and then to break back down to the balance at 87, which was left behind on Tuesday. Really, really, really difficult, tricky behavior. Certainly some opportunity in there if you can get on the right side, because you had one big break, another big rally, and then a second big break, right? And now, in full disclosure, I definitely had difficulty with the early break. Absolutely smashed it on the uptick. I mean, we bought the lows. No kidding, absolutely. We bought the lows. And we rode the NASDAQ for over 100 on the way up and just really killed it on the way up. But that was after struggling on the way down. I was trying to buy a couple of levels on the way down unsuccessfully, and then managed to ride some down in the afternoon also. So it was, 2 out of 3 ain't bad, I guess, is what Meatloaf said anyway, right? So what does that mean now for tomorrow, right? Now that this is Wednesday, tomorrow's Thursday, I'm explaining to you what happened Tuesday and Wednesday, but I haven't given you anything about Thursday yet. Well, of course, tomorrow's CPI. Nobody knows how that's going to ultimately play out, of course. I know that strangely on the options chain, it does not call for very much implied volatility and or range, which is a little interesting. But what I do feel like, though, is today left us a pretty clear, in my opinion, I believe anyway, line in the sand. And that line in the sand, I believe, is 45.05. That, I believe, is going to be tomorrow's pivot. It was today's ending VWAP and mid. And it's also, as you can see, an HVN of 3, a triple distribution here. You got basically a multi-distribution profile here, one of 3 HVNs at 05. That tells me that tomorrow, I believe the over-under is 05. I would not at all be surprised to see tonight maybe bid back up as high as 05 and fail and trade lower. Now, if I'm wrong, then obviously it's trading higher. Your targets are going to be a new high for the week above the weekly high at 41, and it ought to carry you up into, let me look. I'm not really looking this way, but I'll give you the targets anyway up there. 55. 45.55 would be my bullish target. But what I'm really looking for is a break, and for that to carry this from 45.05 over under down to 44.64. That's the target. I mentioned this. Well, I gave you 75 the other day, right? But it traded 78. 78 was a gap, and we knew that beforehand. But I anticipated anyway that it would probably trade through the gap a little bit. Not just hit the gap and stall, but yet trade through the gap a little bit. And that's why I picked 75. But now that it's traded 78, I no longer wish to see 78. If tested again, I no longer anticipate that to be a good low. That would be only then to be exceeded, at which point I've got an old end of quarter settle print down at 44.64, and that for that reason, that would be my bearish target. So that's my plan, but it is a tricky one, and that's a shout out to David Starr, because he and I had quite this conversation today about the nature of the price action and what we agreed that we thought was somewhat tricky today. There was a lot of opportunity in it. Don't get me wrong. Don't say I'm saying it was tricky and there was nothing there. No, I'm not saying that at all. There were multiple good opportunities. One big short, one big long, and then another big short. There were 3 major opportunities on the day today. But when you get those wide swinging, price swings from high to low, back to high, then back to low again, I mean, that's covering a lot of ground. That's pretty interesting. So I hope this all made sense, and maybe even learned a little something about the nature of market profile and volume profiling, but market profiling terminology in the day types, and that particular one that's quite meaningful, actually, that extreme day type. And then even more so, the importance of, and you'd never see this on a market profile, but you will on a volume, and that is the fact that it left that point of control, that volume, most traded price in terms of acceptance and or participation, back at the low yesterday, while trading out at the end of day, price goes out at the high. And there's a lot to learn from that. There's a lot to a lot of takeaway from that. And you saw it, even if you're just hearing about this now for the first time or just learning this as a concept, you saw it play out today. And that is what played out today, and therefore the importance. Good night. I'll see you again at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me